Hello traders, this is Dez here at Grok Trade, and this is the weekend edition, good through Sunday, January 4th, 2015. Taking a look here at the markets, wrapping up 2014. You had the NASDAQ up 13.4%, the S&P up 11.4%, the Dow up 7.15%, the Russell's up 3.5%. The problem with that is simply this. The Russell's was only up 3.5% for an incredibly strong year that we've had in the markets overall. That shows a sentiment on the bearish side. Why is that? Because people, when the markets start to get top heavy, they flee small cap stocks. Small cap stocks are found in the Russell 2000. And that fared the worst for 2014. So that being said, that is a warning sign that we've had this big super run the last umpteen years, and now we are here. So I want to take a look here at first the daily chart. Daily chart on the S&P 500 is a rising wedge. We keep hitting this keep hitting the resistance here and dropping. This one has dropped, but to the flatline 20-day moving average with a doji. And if we can get higher, you could get a few day bounce here. And but we need to get over that 2075. 2075 is a big number. If you get over that, be looking to pick up longs, unload any shorts that you have, and follow that through. At least a day or two to the upside. And if we can break through this resistance, keep holding those longs. However, if we go lower, I'm going to say if we go lower by 2043, put a line here. If we get lower than this area, be looking to add to your short positions, because you should be short, not long right now in this down leg. So making the assumption, keep your shorts, add to your shorts if we go below that 2043 area. Unload those guys if you're at 2075 or higher, and be looking to pick up longs. So if we go over to a weekly chart, this is a problematic for the bulls. We have a rising wedge. We drop for the week, finding support there. But if we break down, if this coming week is bearish, we're going to see the next few weeks bearish, or at least we have a really good chance of that. A lot of downside opportunity here on a weekly chart. If you look here at a monthly chart, higher. Forget that doji for the time being. But look at this huge doji. This was December here. Very toppy, very much extended away from the 20-day moving average, very extended from the 50-day moving average. So moving averages don't like to get too far away from those. As you'll see, price action stays pretty close to the 20-day and the 50-day, the blue and red line. We just, price action always likes to stay near that. Now that we're extending away from those lines, it's going to act as a gravity spot. It's going to want to pull back down into those moving averages. So I'm keeping a very close eye on that. So I think going into 2015, the thing that we need to watch out for is a correction. I believe, in fact, it will happen 2015. I think that we're too extended right now. So this bull run we've been in about the middle of 2011. So you're talking 1, 2, 3, 3.5, 4 years. Or if you go back to 2009 and say it started here, you're looking at 1, 2, 3, 4, 5, 6 years. 6 years for a bull run. And looking at a good 3 years since we've had any sort of meaningful pullback. The last meaningful pullback we received was 2011. So you're saying 1, 2, 3, 4. 4 years since we even had that. 6 years in the big run. Usually bear markets or bull markets are 5 years. If you look at this, we went from 2003 or 2003, 2007, going into 2008. and then the market correction. So you had 5 years here. You had a good 5 years going into 95 right here at the kind of the start of the technology boom to 2000, another 5 years, and then the correction. So you had 5 years here, and then a 3-year correction, 5 years here, like a 2-year correction, and then here we have a 6-year run. So it's breaking the norm right now. So we're certainly looking for a correction. And things that go up quickly tend to drop quickly. So it'll be a nasty little pullback that we get. And I do anticipate that happening 2015. So there's a prediction for you. Take care and very safe trading to each and every one of you.
My name is Eric Gershon. I'm learning from Des and Mark about the trading business, actually. For me, it's really understanding the exact way to do the trend lines. You know, are they shadows? Are they the close of the candle? That was my main question. I really wanted to understand how to make the trend lines the right way. As Des says, you know, he's pulled back the curtain so you can kind of see how the professionals do it, because essentially that's what we are. That's what I want to be. I want to be a professional trader, you know, and I don't want to be an amateur, and I don't want to trade like an amateur. And that is the thing that I'm learning the most here, is how to be professional at this and how to approach it from that point of view. They have far exceeded my expectation. I think, you know, I know Mark for a number of years, and he has been talking to me about doing this for a number of years, and I've watched him trade, and I just want to be, I'll just take a little bit of the way Mark trades, and I'll be a happy camper. Des, I've been watching the videos, and he's everything I thought he was going to be. You know, to the point where I actually talked to him about, you know, managing my retirement account. That's how, and you know, I don't know him that long, but he knows what he's doing. He's the real deal. You know, these are the real guys. I've been to other seminars, and most of these guys just want to, you know, talk while they're trading. You learn almost nothing. You don't learn about the markets. You don't learn about trend lines. You don't learn about moving averages and what's the right, where should you put your stop. I mean, you know, here, you're covering it from start to finish, and that is what I really like.